I hope you're healthy.
Hi, Eric. Good afternoon. And yes, I'm fine, thank you.
Well, you being fine is a good place to start, and obviously I am as well. Let me ask you this question. Today's Fed announcement, a major expansion of its bond buying program, is doing wonders for your real estate investment trust, up some 15% for the third day in a row. How else does it help Starwood's business?
Well, they're buying AAA commercial mortgage-backed bonds, and it's the first time they've stepped into the commercial mortgage-backed market. They had guaranteed or agreed to buy AAA agency mortgages, and that is a fraction of the real credit markets out there. So in 2007, 2008, the government agreed with their TALF program to buy these securities, but heretofore they've not agreed to do this. So today, that was a step forward. We had actually been working with other players in the real estate space to see if they would buy all rated classes of commercial mortgage backs and just put some stability into the market, because the effect was that of not doing that was a run on the house, if you will. The banks were aggressively marking securities and marking them off the last distressed trade, and you were in this cascading effect that took solvent companies from $20 a share to some of them pennies.
Barry, is that to say you were working together with Tom Barek, for example, from Colony Capital, and Marc Rowland from Apollo, both of whom had been urging the Fed to expand its lending and asset purchase programs?
Well, it was pretty much everybody in the real estate industry, all the residential mortgage guys, the real estate roundtable, which is the CEOs of 100 or so REITs in the country, CREFC, which is an organization of everyone involved in financing commercial real estate. And you might think of commercial real estate as the office buildings in Manhattan or some mall owned by some wealthy person, but the shareholders of these companies are individuals. They're pensioners, they're pension plans all over the country. And much of this real estate that is financed in these markets is small corner shopping centers, a grocery store, a Jack in the Box, a Pizza Hut. All this stuff is financed not by J.P. Morgan or Bank of America, but by these small lenders and small community banks, and the whole industry sort of stopped. And instead of borrowing money at, let's say, 3%, they say, we're not open for business, and if we lend you money, it'll be at 8%.
So is that to say, let me put it to you this way, is there a floor under the market now? Are we going to look back on March the 23rd and say, that was the bottom?
Well, Eric, I went on TV on the crisis on the 13th, March 13th, and I was pretty bullish. I thought, this was a fluke, this was going to pass, that the government would stimulate and probably overstimulate, and I think they're on their way to overstimulating, by the way, which means we'll have to deal with the ramifications of trillions of dollars of new quantitative easing or paper printing. And there are long-term benefits to what's taken place, which you already got lower mortgage rates for homeowners and that'll be a tax cut to the consumer. And now you have this oil price war, which is giving people a tax cut in the form of lower energy bills. So, and then on top of it, I was pretty optimistic, and people thought I was nuts about new innovations in the medical space that would either come with a cure or a way to help people with the disease. And every day I read about another drug or another condition or another way to help people that have contracted this.
So are you still as optimistic as you were then?
No. So I think that no. So the answer is no. Actually, I still believe all those things are true. I don't know how to think about the trillions of dollars that will come into the economy that will have to sort of go out of the economy. And I think the slope of the recovery, I think the market may be a little ahead of itself on the slope of the recovery. I heard the prior interview, and yet the woman was right. She's from Goldman Sachs. I think the manufacturing sectors will come back. But you can look over at China. We were all encouraged by China's recovery, the fact that the factories were open. But if you look at the real economy, the restaurants, the shopping centers, the hotels in China, hotels are running 30% occupancy. So people aren't traveling. They're not going to the restaurants. They're not going to the malls. And I think it'll be slower here, depending on what happens on the medical front. And I think, obviously, if it's all clear and nobody's dying Americans will forget fast, and the recovery will pick up steam dramatically in the third and fourth quarter. So these first two quarters, or actually this quarter, will be a mess. And I think the market's just looking through it and saying it doesn't really matter much. But there are sectors of the market that have rallied so hard that they're off like 10% from their highs, and that seems inappropriate because to me, the economy's been damaged enough that we're probably not at cyclical highs or all-time highs that we were at when this started. So I think certain sectors, I think you're seeing it right now in the stocks of like a Microsoft or even the Amazons, which are not really responding. It's the shredded stocks that were impacted precisely by this that have been recovering the hardest, like our company, which we announced twice, our property trust. We had over $800 million of cash twice, and we still got crocked. And by the way, that's the functioning of the market mechanics today, which is it's dominated by exchange ETFs, the exchange traded funds, and people are buying and selling all the mortgage REITs regardless of the individual characteristics of the company. And so the baby got swept out with the bathwater, and so some companies really had challenges. You saw companies sell billions of paper in distressed situations over weekends with bid lists. People were freaking out. Well, Starwood Property Trust never had that situation. We never put anything up for sale, and we never had a margin call we couldn't meet, and we were sitting on $800 million of cash. It didn't matter. They took our stock down like we were going out of business tomorrow.
Have you bought anything?
Yes. We started buying.
What have you bought?
Yes. We've bought some commercial mortgage-backed securities. We've bought some equities, not necessarily in the REIT, by the way, and also our equity business. And we've made offers to buy hotels from distressed sellers, and we haven't seen, a lot of stuff hasn't traded, but we had been in the middle of several take privates around the world, and we backed away, and now we're re-engaging and having conversations with these people about we can't buy anything, and nobody really can buy anything until the debt market stabilizes. So that's why today's announcement was so critical, because yes, it does put a floor under the most secure securities in the stack, so things that should be worth parity or should be worth like a AAA bond should be worth $1. And so now they will trade close to $1 instead of at 90 cents, because if it's a AAA is 90 cents, then the rest of the securities, yes.
I was just about to say, when you're looking at things, how much money do you think you could put to work? How much would you like to be able to spend if you find things at the right prices?
Well, we're in the middle of raising $1 billion special situations fund that we put out really quickly to our clients, and sadly they couldn't move as fast as the markets could. So with real estate,
so there's $1 billion there, and what about in your other businesses?
We had several billion we could invest. I mean, we had to be careful. I mean, given that there was sort of an earthquake going on once again in the financial markets, and this was man-made, which is why the Fed's done a good job. I mean, the banks were saying, we understand, but we're still going to call your loan. Like, that wasn't very helpful. They're our friends, but they were still acting like, they did in 07, 08.
Hang on a second.
Really
banks called some of your loans?
Not our loans, but they were calling around the marketplace and saying, this loan, we need you to pay it down a little bit. And again, some of our peers didn't have the capacity to do that. And the banks were acting, in my view, arbitrarily, but they have their own capital regulations that were not released. So, the real estate world, everyone's wondering the same thing across all the asset classes. Like, when are our tenants going to pay?
Are they paying? You've cut to the critical part, right? You're in the hospitality business, you're in the multifamily business, the residential business, the hotel business. Are tenants paying rent? Are creditors paying interest? And have you stopped payment on anything?
So we own about 80,000 apartments, and we're a point or two away from a regular collection cycle. So let's say we're at 88% of our tenants have paid in residential, and that might be a point or two off of what it would have been last month. I think actually what will be very interesting to see what happens in May. But I think everybody was surprised, for the most part, in residential, people are paying their rent. In office, people are paying their rent, and you have the service office apartments service office companies who WorryWorks and the Regis is trying to renegotiate, and some of us have them in our buildings and some of us don't. And then you have retail, which is a complete random walk in the park. It really depends on who you have in your mall and you know, a national credit tenant might say, I don't want to pay you, but they have the ability to pay you. And then you have a small local guy who can't pay you. So I'd say retail is the worst shape of all, because the long-term health of the retail industry is sort of got to be in question for many of these players. And then, you know, obviously you have restaurants and malls, and they're either, if they're in the courtyard, the mall is closed, so they can't function. And the hotels are zeros for the most part, although if you go way down the stack to like extended stay hotels, we have a chain of hotels with 196 hotels in it, 24,000 rooms, and it's running in the 70s in occupancy, because it's really like extended stay housing. So, but our big hotels are closed, and you know, we think you can buy those on an asset level. I've been through 9/11. I've been through
Barry,
all of the crises in hotels, and they'll come back.